Our forecast for inflation next week is for the Q3 CPI to come in 1.6% on the quarter. That's the headline rate. That'll take the annual rate to around 7%. And then on the core measures, so the key one there is the trim mean, we're looking for an increase of 1.5% on the quarter, which would be in line with the previous 2 quarters. I think if we're right in terms of our forecast, what we'll actually see in terms of headline inflation is that over the past 3 quarters, the quarterly rates have actually eased a little bit, but the annual rate is still pushing higher, basically due to base effects. Whichever way you slice it at the moment, inflation is red hot in Australia. I think it'll stay that way over the rest of this year. But then as we go through next year, with the lagged impact of rate hikes actually working to slow consumer demand, some of those kind of idiosyncratic factors that have pushed inflation up, like food prices, for example, no longer rising so much, I think we'll see the rate of inflation come down.
And I think you've said you expect it to abate quite quickly, quite swiftly in 2023. Why do you think that is? Is it simply just interest rate hikes that will finally be flowing through?
That'll be part of the story domestically, but I think the other thing to keep note of is that the global economic backdrop has deteriorated, and that's going to mean lower global demand, and that'll weigh on goods prices. We obviously import a lot of goods, particularly on the retail side, and I don't think we'll see prices rise for those things. The other thing too is that a lot of the upstream supply side inflation indicators have actually eased. If you look at shipping costs, for example, they've come down quite a bit. Commodity prices have come off. All of those kind of upstream inflation pressures that actually were part of the reason why inflation increased up until this point, those forces will dissipate as we go through next year, and that'll help see the rate of inflation actually come down.
Obviously, you were the sort of lone voice in your 25 basis point call for the last RBA meeting, and you were vindicated. The RBA did move by 25 basis points. I guess the question here is, going forward, if inflation heats up, say, next week more than expected, do you think it could cause a pivot to a 50 basis point hike? At what point could you see the RBA go back to that?
Look, I think the hurdle for the Reserve Bank to go and raise the cash rate by 50 basis points now at any given meeting is very, very high. That was a big call from them to slow the pace of tightening down from 50 basis points to 25 basis points in October. We thought they were going to make that move based on the communication they'd delivered over September. They obviously went through with that move, and in the minutes that were out this week, they really put forward the case as to why they moved by 25 basis points. And all the arguments that they made will be just as relevant next month and in coming months as they were this month. And they talked a lot about how rate hikes work with a lag. Therefore, the policy tightening they've delivered up until this point hasn't really had any chance to have an impact on inflation. They're very cognizant of the fact that households, there's plenty of households out there that are carrying a lot of debt, and they'll get a lot of mileage out of these rate hikes. The other thing too is this week we got labour force data, which certainly wasn't cause for concern. The unemployment rate held broadly flat at 3.5%. Employment growth was basically flat, and job vacancies have actually rolled over a little bit. They're still at elevated levels, but they're coming off. So I think the idea that the RBA will deliver a 50 basis point hike again is a very remote one. And I think now they'll just stay the course with 25s. And we think they don't have too much further to actually go.
Do you think the labour force numbers are the start of perhaps a tick up in unemployment?
Well, our call at Commonwealth Bank is basically that 3.5% is the floor in the unemployment rate. We've had that view for quite some time. The Reserve Bank has said that they think the unemployment rate can get a bit lower than that before going back up. But we've now had about 3 or 4 months where the unemployment rate has basically been stuck around 3.5%. And if you look at the forward-looking indicators of the labour market, still strong, but easing a little bit, it does actually signal that 3.5% is the low point. And what I think we'll see is as we move forward from here, that demand in the economy will cool as the lagged impact of rate hikes come through. We've also got the international border open, and we saw in the data this week that arrivals into the country have picked up materially over the past few months. And a lot of those arrivals will actually be looking for work. So that then in turn drops job vacancies and will make it harder for the unemployment rate to go any lower from here. So I think 3.5% is probably the low point. It'll probably hang around there for another month or two. Then I think as we move through next year, that unemployment rate is going to rise pretty gradually, but it will be heading north.
Is there a lag in the unemployment rate pushing up wages growth? I mean, just given we're probably at full employment here, when do we see wages growth pick up? Because it hasn't really picked up significantly, and it is probably the major concern when it comes to inflation going forward.
Yeah, it's a good point. Look, it has picked up in Australia, but nothing like what we've seen in other jurisdictions. I mean, if you look at the US labour market, for example, wages growth there is way too strong. It's at the kind of levels that's causing the US Federal Reserve discomfort. And they actually need to engineer a hard landing in the economy to basically get the unemployment rate up in order for wages pressures to actually dissipate. Very different story for us in Australia, and it's actually a good news one to the extent that wages growth is moving up. According to our internal data at Commonwealth Bank, it's running at about 3% through the year. That's not a problem for us. In fact, the Reserve Bank would happily see wages growth get up to around 3.5%. And I think it's the fact that even though wages pressures are slowly emerging, they're not running at the kind of levels that are problematic. That's a key reason why the RBA felt they could move and slow the pace of tightening down from 50 basis points to 25 basis points, because we don't have that wage price spiral in Australia. I don't think we'll end up having it, because I think that kind of window for wages pressures to really get cooking is starting to narrow, given the forward-looking indicators that the labour market have turned a bit. We saw in SEEK data this week that advertised salaries that were running at a bit over 4% a few months ago, they're down to now 3.7%. So I think wages growth will probably end up settling somewhere around 3.5%, which would be a good outcome. That's consistent with inflation sitting within the target band over time. And that's ideally where policymakers actually want to see wages growth get to in Australia.
Before I let you go, budget next week, just your thoughts on how this could impact the economy going forward?
Look, I think, I'm going to use the words of the Treasurer here. He said, expect a bread and butter budget. And I think that's absolutely what we're going to get. I don't think we're going to see anything in the way of stimulus towards the economy, nothing in any material sense. I think that's the right policy approach at the moment, because it will mean that the Reserve Bank has confidence to slow the pace of tightening, which they already have done, but not deliver too much more. A very different story here to what we've seen over in the UK. I think there is something of a coordinated response between fiscal and monetary policy right now. It's a good news story. I think there won't be too much ultimately in this budget, and it's probably next year in the budget we'll be looking for a few more major policy announcements.
Gareth Aird, appreciate your time. Thanks so much for joining us here on the program.
Nice to chat, Ingrid.